what is the halving? All right, so yesterday we had the halving. This is the screenshot I took on my flight here of mempool.space celebrating the halving. That's that yellow block. That's block 840,000. And that's a big event. That's very special for Bitcoin. It's our fourth halving in 15 years. And it's the beginning of the next era for Bitcoin. The next 4 years will be the fifth epoch for Bitcoin. So where are we as we begin the fifth epoch for Bitcoin? Well, we are here. We are a $1 trillion asset class, more or less, in a $900 trillion global asset ocean. And how did we get here? And where will we go from here? For me, it's all about the halving. So this is Bitcoin's entire monetary policy, this expression on the left. We're at MIT, so we're going to go into some of the math and the details a little bit in this talk. This is everything for Bitcoin. This is the supply expression for how Bitcoin releases its supply, going from 0, day 1, until eventually 21 million. How do you go from 0 to 21 million? You release it block by block. So that 50, in the first epoch for Bitcoin, 50 Bitcoin were released per block. And that gets divided by this 2, which has that important I exponent there. Every time we go through 210,000 blocks, that I increments upwards. And then you're dividing that 50 by another exponent of 2. So the result of that is this table on the right of the block subsidy specifically. So the miners receive the block subsidy plus the fees included in any block. The block subsidy is how Bitcoin's supply is issued over time. And we just went yesterday from 6.25 Bitcoin per block released to 3.125. Here's that in code, since we are at MIT, and it's pre-programmed into the Bitcoin protocol, and it's unstoppable. So every 4 years we have this narrative of like, will the halving not happen, or for some reason, or people who aren't into Bitcoin wonder that. But here it is. It's just code, and everybody's agreed to this code by participating in the Bitcoin protocol. The key there is that halvings equals n height, block height, divided by the 210,000. And once it reaches the next integer, it increments up and changes the subsidy for blocks for the next 210,000 blocks. So this is where we are at in terms of Bitcoin's overall supply issuance over time. This is a chart I got from Pierre Rochard and added to it. You can see this asymptotic line going up and to the right. That's our supply currently in circulation. And it approaches that 21 million flat line. So in that sense, you can see how the supply issuance is slowing down. We're experiencing increasing scarcity of new supply. And that's what the orange bars show. So in the first era, 50 Bitcoin of subsidy per block, then 25, 12.5, 6.25. You can see that exponential decline. And it is approaching 0 and will effectively be 0 in, depending on how you look at it, in 12 years. So that is Bitcoin's supply issuance schedule. It is increasing scarcity of new supply issuance, terminating in absolute scarcity. And that's huge because that's never been possible before in the physical world with any asset. You can't have absolute scarcity in the physical realm. You can only have that in the digital realm. And Bitcoin is the invention of digital scarcity and the simultaneous invention of absolute scarcity. And that's a huge deal for assets. This halving is also exciting because yesterday, we just got better than gold in terms of our supply issuance per year. And that makes, you can see that drop right there below the blue line that is gold. And that means that Bitcoin now is a better store of value asset than gold. And if you remember the chart earlier, gold is a $12 to $16 trillion asset. Bitcoin right now is a $1 trillion asset. So that's a 10 plus X to match gold. And in my opinion, the only reason we haven't done that yet, and maybe we don't do that over the next 4 years, is because people are still catching up to what Bitcoin means and why it's an attractive asset to hold. Okay, so taking it back a little bit here, Bitcoin's entire price appreciation story to me is about supply and demand. And so here's your classic supply and demand, your Marshall Cross, this Econ 101 stuff. And price is set where supply and demand meet. But Bitcoin is different because Bitcoin has completely inelastic supply. Its new supply issuance doesn't care how much supply the market wants. It's going to produce what it's pre-programmed to produce in any given 4-year period. And then it drops. So the supply created shifts every 4 years. And obviously the intersection with the demand curve changes and changes again, and will keep changing. This, of course, is a bit of a static view, and it doesn't take into account all the external variables of how demand might shift, probably a lateral shift, as more and more people learn about Bitcoin and realize they want to include it in their portfolio, and it becomes de-risked from a geopolitical point of view as well. But the point here is that you can see that in a vacuum, where supply meets demand on the y-axis goes up as the amount of Bitcoin being produced decreases. So to take a different lens of the same idea here, this is where we've been for whether or not you knew it for the last 30 days. Based on the current market price of Bitcoin, all else equal here. So this does assume that supply and demand have been in balance for the last month, but that happens when the price goes sideways, all else equal. So for the price of Bitcoin to go sideways, there needs to be enough net inflowing demand to absorb the newly created Bitcoin over the course of that month from mining. And at current prices, the amount of Bitcoin being mined for the last 30 days was $1.8 billion worth of Bitcoin. Price has gone sideways. That meant that had to have been $1.8 billion of net inflowing demand. All else equal, there's a ton of noise here, but these are the core mechanics. That's the last 30 days. The halving happened last night. What does it look like going forward? What's the next 30 days? Because of the halving, there will only be $900 million of Bitcoin produced from mining over the next 30 days. But that doesn't mean that demand will drop by half. Ostensibly, it'll remain the same. And then you have a problem. You have a shortage. You have a supply shortage, and that can accumulate into a supply shock. So bear with me here. We're going to get into kind of the mechanics as I see them of why the Bitcoin halving drives a major bull market over the ensuing 12 to 18 months. Okay, so this is right before the halving. We have that supply and demand balance. The amount of new supply, the orange block there, is equal to the amount of inflowing demand. You've established price equilibrium between supply and demand. At any given time, there's a certain amount of Bitcoin that's available for sale. 5% of Bitcoin has moved in the last month, typically, so that's the size of that box. Relative to the whole circle is the total circulating supply of Bitcoin. Not all of that is available for sale. So what really sets the price is what's available for sale. And we'll see how the mechanics here play out. So this is before the halving, then the halving occurs. Not as much supply is being created, but just as much demand is coming in And that starts to chip away at available for supply. 3 months later, you've eaten a little bit of what was available. And then that continues. The price has to, as the amount of available for sale supply starts to shrink, the market has to find more supply. The only way to do that is for the price to drift upwards in order to induce holders to become willing sellers. So the price starts to drift up at this point, and then it keeps drifting up. And as it keeps drifting up, more demand comes in because people get excited. Why is the price of Bitcoin, why does it keep going up for the last 6 months? I want in on that. It's going to keep going up. I want to buy more. So now you're suddenly eating bigger chunks. Granted, you're also starting to inspire some long-term hodlers to start selling some supply. But this starts to accelerate. The imbalance starts to accelerate. And now you've really reached mania conditions where you're chewing through available for sale supply because of the imbalance of demand versus supply from mining and supply from hodlers becoming willing to sell. And what we're talking about here is a development of mania. This is what mania looks like. And that's a bubble. And that's the reality of what a Bitcoin halving creates. It creates the conditions for a bubble over the next 12 to 18 months because of that accumulation of the supply shortage, a supply shock. And that's been the story of Bitcoin. If you really want to take out the noise and look on a log chart at the Bitcoin price over time, it looks, more or less like this. And that shouldn't surprise us because we have these vertical points in time where supply-demand price equilibrium is upended. And then the Bitcoin price, the market, has to go through a process of reestablishing equilibrium. The price has to drift up. People get too excited. They overextend themselves. It turns into mania, turns into a bubble, goes higher than it should have gone. And then the reverse action happens where there's a crash on the backside. But it ends up finding some equilibrium just in time for the next halving to arrive, to upend that supply-demand price equilibrium again, and the process repeats. The key about these bubbles is that the conditions of the bubble, the condition that created the bubble, is not undone by the bubble running its course. So there's less Bitcoin being mined after the halving, and that is permanent. So you don't go back to the conditions that were before. And that's the major difference between Bitcoin's bubbles that are permanent and cumulative versus something like a tulip mania where there's nothing stopping you from going back to prior conditions. So this is what we've been living through, and those mechanics are still there for the halvings. The halvings will keep happening every 4 years, every 210,000 blocks, and price will continue to react to it in this very organic, inevitable sort of pattern. What this amounts to, as you can see on the y-axis here, is that the purchasing power of one Bitcoin goes up over time. That's the inevitable outcome of Bitcoin's increasing scarcity, is that Bitcoin that you hold grows in purchasing power over time. That makes Bitcoin a savings technology. You put value in it today, and it will grow over time. That's a crazy thought, but that's the reality of the mechanics of Bitcoin's increasing scarcity. So with that in mind, remember, this is where we're at today. Just 1 trillion of a $900 trillion global asset landscape. And if what I said is true, and if that made sense to you, Bitcoin is a savings technology that grows in value over time. Then the question becomes, how much of the world's value might be interested, as they learn about this, in storing their value that's currently in bonds or real estate or any of these other buckets, instead in Bitcoin? So that's why the halving is a huge deal. And yesterday was the most important day in Bitcoin's calendar. It's my favorite day the only holiday at this point that I celebrate. And I hope that you guys appreciate that's what just happened yesterday. And today it feels like total non-event. Nothing feels different today. But as the mechanics play out over the next 12 months and you're starting to wonder, what's going on? Why is there another bull market happening for Bitcoin? It's because of yesterday.